Hey everyone, welcome back to the channel. Today we're taking a deeper look at Maker, MKR/USD, not just through the infinity signal, but also through the lens of traditional technical patterns. We'll explore how the infinity signal's momentum confluence forecasts align with classical formations like channels, double bottoms, and divergences, revealing why MKR may be entering a major transition zone. 1. Market context, setup phase. On the chart, Maker's Heikin Ashi candles have been in a steady downtrend, but that phase is now compressing. The candles are shrinking in size, with shorter wicks and softer bodies, a visual sign of bearish momentum exhaustion. That compression lines up perfectly with what the infinity signal has been projecting, a momentum confluence window between late October and mid-November. This is where the system forecasts not direction, but timing, the moment when momentum streams are most likely to meet and reverse. 2. Descending channel and Lindsey target. If you map traditional trend lines across recent highs and lows, you'll notice MKR trading inside a descending channel, a structure that often resolves with a breakout when momentum begins to flatten. The Lindsey target balloon sitting near $1,322 marks the likely exhaustion zone for the bearish wave. In classical terms, this is the support floor of that descending channel. Each test of this zone absorbs more selling pressure, and that's what the infinity signal calls a momentum saturation point. 3. Double bottom and rounded base. Just above the Lindsey target, you can see two clean troughs forming, a double bottom pattern. This structure represents accumulation, a hidden shift from supply to demand. And notice how the price begins to round out between these two lows. That's the start of a rounded bottom, a transition that often precedes sustained bullish reversals. And what's remarkable is how the infinity signal's projected %K, %D crossover aligns almost perfectly with the expected breakout zone of this traditional pattern. It's geometry meeting timing, classical structure meeting predictive momentum. 4. Hidden bullish divergence. There's another key signal hidden in the chart, a bullish divergence. While price made slightly lower lows, the infinity geometry, those gray projection lines, began to flatten and lift. That indicates internal strength rebuilding even as price weakens. This is exactly how traditional RSI divergence works, but the infinity signal captures it ahead of confirmation, giving a forecast rather than a reaction. 5. Candle confirmation. The most recent Heikin Ashi candle is smaller, nearly neutral, and shows little to no lower wick. That tells us sellers are losing their grip. The confirmation trigger will be the first green candle without a lower wick, ideally forming near the next infinity bulgalone inside the current projection window. That event would validate both the infinity signal's forecast and the traditional breakout structure, a confluence few traders ever see coming. All of these patterns, classical and algorithmic, are pointing to the same window of opportunity. The infinity signal's purpose isn't to predict direction, but to pinpoint the time of confluence, when energy across multiple timeframes meets. And right now, that energy is converging beneath the surface of Maker. 6. Summary. Traditional meets predictive logic. Closing segment. So to wrap it up, Maker is sitting at the intersection of classical structure and AI-predicted momentum confluence. A descending channel, a double bottom, and a fading bearish phase are aligning with the infinity signal's projection zone. If the next green candle forms alongside an infinity bull balloon, we could be looking at the birth of Maker's next macro cycle.
Before we wrap up, let's take a moment to look at how the traditional chart patterns and the infinity signal align with one another. When you combine classical market geometry with AI-driven momentum forecasting, you start to see how both approaches are describing the same underlying rhythm, just from different perspectives. Here's a quick summary of that alignment. Now we can see it clearly. The The descending channel shows compression, while the infinity signal identifies it as momentum saturation. The double bottom matches the Lindsey target zone, forming a structural reversal setup. Bullish divergence on the chart mirrors the flattening infinity geometry, and those bearish Heikin Ashi candles confirm that bearish energy is fading. Every one of these elements, classical and algorithmic, points to the same conclusion. We're entering a critical time of confluence. That's the infinity signal's purpose, not to predict direction, but to forecast when momentum forces meet across multiple time frames. And right now, that convergence is building beneath the surface of MKR.
So, as both the traditional and infinity perspectives converge, the message becomes clear. We're not watching random volatility. We're witnessing a moment where time, structure, and momentum are aligning into a single rhythm. When these confluence points trigger, the market often makes its most decisive moves, not because of chance, but because the underlying energy reaches balance and then releases it. And that's what the infinity signal is designed to reveal. Not just where the market's been, but when its next major heartbeat is about to occur. The infinity signal, trading the future.